Hello, everyone. Once again, this is Brian Beamish, the Rational Investor, coming to you today with another technical analysis tutorial from our good people at Coinigy. As you can see, we've got this nice login page here at Coinigy, so I'm going to go ahead through this tutorial and sign in. And you see how our chart loads up. Today we're going to look at the relative strength index. So we started off here with the chart. There's an hourly chart of Bitcoin in US dollars on Bitfinex. And you notice the defaults it loads with the volume. For the purpose of this tutorial, we're just going to hide the volume for now. And as I said, today we're going to concentrate on the relative strength index. So I'm going to go into my indicators panel, and I'm going to scroll down and select relative strength index. And you see on the chart, I'm going to make this a little bolder here. We're just going to go in and click on the format button. And let's maybe change this to like yellow so you can really see it. There we go. All right, so this is a very popular indicator, relative strength index, and by all means, if you want to, you can always Google it, relative strength index, and there's usually just a world of information on the internet to help you understand these indicators. But understand that basically it is just an oscillator. And here's the mathematical formula for figuring it out. But in essence, it's just simply an oscillator. Whoops, where's my, there we are. That moves as the asset moves through its cycle from overbought to oversold levels as the price of an asset moves up and down through its life cycle. Good part about relative strength index is basically what it does is it's the concept of the rubber band. And it's going to measure price performance over a given reporting period. And you can only stretch the rubber band so far. And like I said, if you want to go into the actual math of how the RSI is calculated, it's number of days up divided by number of days down, just to give you an idea of how far stretched that rubber band is. You can go into these settings. Remember, we click on this format, and you can change the number of reporting periods. Some people who like to use the RSI as a real trade signaling tool will set it much faster. And as you can see, the strength index itself became a little more crisp. Let's go ahead and just switch it back to the defaults, that 14 reporting period. Oh, let's get our yellow line back again, though. All right. And as we can see, this index itself has a minimum reading of 0 and a maximum reading of 100. Right. There's the, can't go below 0, and it can't go above 100. So why don't we leave it like that? All right. And simply put, readings above 70 are considered overbought, and readings below 30 are considered oversold. If you watched my previous MACD tutorial, then you'll remember that I often like to couple indicators, and I'll use something like the MACD to give me the raw momentum of the market, and then something like an RSI to highlight overbought and oversold conditions. Those that are a little more strict, if you will, in their interpretation of overbought, oversold might even change this to 80-20. When we do that, you see that indeed this market never did really get overbought and clearly is oversold here. Right? So I might suggest that if you're going to use that, maybe play around with the levels until you get something that you're most comfortable with. The bottom line here is anything really above 70, I just set it to 75 and 25. Overbought, anything below, in this case, oversold. And as you can see, this is a 1-hour chart. We can apply this to any time frame if the chart will load. Just have to be nice and patient. All right, we're waiting. All right, we're waiting. Oh, that's a shame. Oh, well, let's go back to 1 hour. Maybe that won't load either. All right, well, we have it on another screen. Here it is. Here's the default, the 14 period. Let's go and change this back to yellow. There we go. And we'll hide that. So now this is off of the daily Bitfinex chart. And you can see, even just set at 70, the index got above, or what we consider overbought, on this massive spike up here in price. And it got oversold a couple times here as price was really tanking. It's a handy little tool. It's fairly easy to apply to your charts. And as I say to most of my students and most of my site members, we never really want to follow one indicator only. If we're thinking about creating a trade setup, we ideally want to have 3 independent reasons for taking a trade. One other additional that I will make reference to here in this video is the 50 line. And a lot of these oscillating indicators, they will give you signals as well around the 50 level. So that's sometimes handy too to have on your chart. So what are some sort of ways we can use the RSI to our advantage? What most new people to trading need to understand is that a lot of professional traders really don't like using indicators themselves to give you signals, because this by definition is lagging information. So the way that I like to use these kind of indicators is I like to let them tell me if the market is either internally stronger than what price would lead you to believe, or internally weaker than what price would lead you to believe. And how do we do that? We do that through the concept of divergence. And really, the key to maximizing your sort of usage leverage out of these momentum indicators, keep in mind the relative strength index is a momentum indicator, is trying to identify when the internal momentum of the market is either a lot stronger or a lot weaker than what price would lead you to believe. So how do you do that? Very simply put, it's just a question of connecting the lows and the highs. So hopefully you guys can see here over the left-hand side of the chart. The RSI index made a low here, and then the next low, the next dip in price, it made a higher low than here. At the same time, price itself made a low, which corresponds with that low. It made a lower low in price, but as I said before, the relative strength index did not make a new low. This is what we call divergence. And this is the way I really like to leverage these indicators. And you'll hear me talk about this quite a bit. Hopefully you can understand that, if I was considering to buying Bitcoins, it would behoove me to wait for just a little bit of sign internally that price is not as weak as price itself would lead you to believe. And for all intents and purposes, this divergence pointed out that price really didn't want to go down anymore. You notice that while this divergence was active, price actually basically just went sideways, right? There's where the divergence came in, and really over the next month or two, price kind of just went sideways. I mean, very volatile, don't get me wrong, I'm not saying that, but in essence, seeing this monster panic dump here, right, and RSI not going to new lows should have been a warning sign that, hey, you know what, maybe this market needs to clean itself up a little bit. Yes, we may go lower, right? I'm not saying we're not going to go lower, But just until this divergence is cleaned up, and you'll notice that if you just draw this line right across and connect the dots, you can see that that divergence really started to break down in here. And that's basically in here and trend resumption. Right? So you could technically argue that, maybe this was just the consolidation period that the divergence was highlighting. Very, very powerful tool. All right, let's see if we can find another example for you. Here's an excellent one. Actually, here's a couple really good ones. So if we, again, this is just the default relative strength index, nice and simple. And if we take our little drawing tool and we notice that the RSI made a higher high here, right? Just like that. And then we notice, did I do that right? Actually, that's probably not the best divergence. Let's do this one. This one's nice and sexy. Let's go here. Here. All right, which is almost flat. The RSI rating 23, RSI rating 23. Ooh, just barely. I mean, you might even call that a double bottom. But look how price was making substantially lower lows. So the long and short of it here is the fact that we didn't go to new lows here suggested that price wasn't nearly as weak as what price itself led you to believe. Not a bad little example. I wanted to find you a bearish divergence. Let's see. Well, maybe let's see whether our intraday chart is back. Nope, still never came back. That's a bit funny. Reload that, maybe it'll load again. Excuse me. Here's a good example of another bull divergence. So higher lows on the RSI, but price made lower lows. And so this, while this divergence was still active, right, price moved up quite a bit. You'll notice in my courses, and maybe we'll just leave off with this thought, I'm a really big fan of what we call market structure, right? And that's this concept that W's are buying levels and M's are selling levels, right? It's called market structure. This is sort of, market structure, and what we teach in our course is that we really want to hunt this market structure on the indicators that we use. You can see that there was also market structure here, down, up, breakout, right through there, right off of that 50 line. Remember we talked about that a minute ago. Here's the bearish market structure, right? Fail. And again, fail, right? So you could use the RSI in that way. But I'm a really, really big fan of using the concept of divergence when looking at, oh, wow, look at this right off the top. This is probably the best way to end this session. So you'll notice that price was extremely strong right into this peak here. Price went to a new high, right? But if we look at our relative strength index, we see that the relative strength index actually did not go to a new high. Perfect example of divergence. We say that this bearish momentum divergence is confirmed right here, where the market structure confirms the sell. Right, see how that works? And in essence, as of this point right here, the bull was basically toast, right? Not only were we egregiously overbought, but we now had a bearish divergence and bearish market structure in the indicator. And sure enough, it had to work its way all the way down. I mean, we had a little bit of bullish market structure here, came back, and then bang, new bearish market structure, right? Finally got oversold, right? And this peak was, you know, close to $1,000. We finally got a bullish divergence and some bullish market structure when the price was half that level. So that's a pretty handy tool, just to keep you out of trouble that way. All right, so that's our introduction to the relative strength index. Hopefully my tutorial here enlightened you as to how to incorporate it into your day-to-day trading, how to load it on on Coinigy, how to interpret it, and in my opinion, the best way to use it, and that's to hunt for these concepts of divergence. All right, why don't we leave the video at that for today, and we'll talk to you guys all real soon. Have yourself a great day, and bye for now.